As promised, I said I was going to talk about seasonality on the next video, and I'll be showing you how seasonality was able to help me get my second ever payout with campus fund, which was bigger than the first payout. And yeah, so what we'll be looking at would be the Hong Kong index, because that was where I had this trade earlier this year. And already I think we are familiar with the word seasonality, seasonal tendencies. It doesn't give you a guarantee that the market is about to turn at this particular period, but it compiles data from previous years, average of different previous years, 5 year average, 10-year average, 15-year average. You compile them and then you see tendencies of the market, what the market likely does at this particular point, at this particular date, at this particular time when we get to it. So that was what I was able to use to get my trade on the Hang Seng, on the Hong Kong index, and that was how I was able to secure a payout. Because when the year started, I looked back and found a recurring pattern of the market in January, and you would notice that the seasonal index was showing move to the upside. January, that was 5 year average. If I check the 10-year average, still a move to the upside. And if I check the 15-year average, it's still basically the same thing. So on all averages, the suggestion was a move to the upside, and that move was supposed to end February, which it did. But then I still took another trade, but because seasonality was not supporting that trade eventually didn't work out, and I should have known and I should have paid attention to seasonality, but I didn't. And that is that is that is just how it is, because when you know what works and then you ignore it, you usually pay the price. Because me ignoring seasonality is part of the reason why I'm still in drawdown till now. So aside seasonality on in January, another thing I made sure I paid attention to was also adding a form of COT to the mix, because I checked the South bonds and saw that the retailers were looking bearish and the institutions were buying the Hang Seng index according to COT. So with retailers being opposite of what the seasonality suggests, I took the trade on Hang Seng index. And like I keep saying, my approach is always supply and demand, and that was how I was able to take this trade. It was using supply and demand, and you see that the market came into my level of entry here, and the rest was just basically history, and that's how I was able to secure my second payout for campus fund. And the third time the second time I now tried taking the trade was from this level, which wasn't smart. Why? Because seasonality was no longer in my favor. But that meaning this particular trade ended up just being a gamble. And you see, with seasonality not in my favor, you see how the market melted down. And you'll be wondering, why don't I want to continue the sell on this particular index? Because according to seasonality, slight bottoming out might be happening soon. Even though I still have on the 5 year average, I still have more downside until 1st April. If I should check the 10-year average, I wanted to take this trade yesterday, but since I had a trade on Dow Jones and I had a trade on S&P 500, I just ignored it. Because even on the 10-year average, you see that the seasonality, the move to the downside, is not as significant as it was at this point. So I ignored this particular point in the market, and I was still trying to take buy, and I eventually paid the price. So that's actually how seasonality was able to help me secure my second payout on campus funds. The second trade that added to the Hang Seng index trade, the Hong Kong index trade, and gave me that payout was another trade on gold. And ending of 2025, I think it was in November, that Mr. Brent Skupinski made a video highlighting the seasonal tendency of gold and how December into January into February is usually a bullish period for gold. And another thing that now added to that seasonality was still COT, because the institutions were beginning to look bullish and the retailers were looking bearish on gold. Those were two reasons. And then I now looked for the next supply stroke demand level when we got to it, because it was in December, right? And when I found this rally base rally level, this cluster here, 1, 2, 3, 4, 5, 6 clusters. You can say this is the main rally base rally level, but I covered level on top of level, and if I didn't do that, this trade would have been stopped out. So level on top of level, I covered everything, and this was actually my biggest trade that eventually stopped me out here, because this was where I took profit from this particular level here. I think yes, because it was below here before this meltdown happened. So imagine a swing trader catching a trade from here, and imagine the volatility. So you see seasonality working good, you see seasonality, and you see COT. And that's one thing I would want to use to round up this series, is to know that out of the three tools, if two are looking very good, you can make use of 2 out of the 3. But pay attention to most of my trades having COT in it, having commitment of trader report in it. And if it doesn't have commitment of trader, if I'm using just valuation, I'll add seasonality to it. So it's just having confluence of other fundamental data and not just basing your trade off technical analysis, because it's not sustainable, is what I've noticed. And because of having these fundamentals by my side, I now usually stay hands off for a long period of time. I stay hands off from the market until fundamentals align. Like now, March, it's been just this US 30 and US 500. Even though I knew we are still okay, this is second week of March, we are still early in March, but my main account hasn't had a lot of action on it. Conservative, because I'm waiting for fundamentals first. It's not about taking random technical levels without reason behind it. So we've gone over 3 data, we've gone over seasonality, we've gone over valuation, we've gone over COT reports, and those are the only 3 tools I make use of when trading on campus fund. I hope this information was useful to you, and if it was, don't forget to subscribe, don't forget to like, and I'll be seeing you on the next video. Any question you have, hit me up on Instagram. I reply ASAP, my preferred DMs, because we can converse, get to know each other more. And still, any question, I'll give you one-on-one brushing up from what I know so far. And that's it. Basically, just a run through of how I make use of my tools and how it has been able to help me sustain my account for over 6 months now, because I've had this prop firm account for over 6 months, which is crazy because the drawdown level compared to other prop firm is smaller, because it's 4% drawdown, and still I've been able to successfully maintain the account and not blow it till now, which is pretty good on my side. So that rounds up today's episode. I still have a trade on US 30 running. I have a trade on S&P 500 running, and I'm going to just let those trades play out as they should. Stop loss or take profit, one of them, and we'll see how it goes. But don't forget to subscribe, don't forget to like, and I'll be seeing you on the next one. Take care.